Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Friends, checking in on the broader markets. Pretty wild day out there today. I was actually looking for a top to be set, at least a temporary top. You know, the video yesterday I was talking about how bulls are getting a little bit cocky, and what stood out to me was the euphoria push seen in our laggard sectors, the airliners exploding, the gambling and casino names having a big day, cruise liners, pretty sure they had a big day as well, yes, and the financial sector. So we've been talking about the laggard sectors. Watch the correlation between the financial sector and all of those sectors, because there is a very notable correlation between them. And I was watching Jets for a potential climax today because of the volume, but in the end, XLF bulls saved the day. We had the setup there. The setup was there for the bears to set a temporary top, and yet again, the bulls just flip the switch and start buying at the end of the day and save everything. So here on SPY, the setup was, what am I looking at? I don't want SPY. I want the S&P 500 futures chart. So the 4-hour time frame there, we were looking for a higher low. And to start the morning, that's what we got right off of exponential support. Look at every consolidation that we've seen in the last week plus. It's gone right off of the 12-period exponential support and held that level. And here we go yet again. And what happened was the setup was there. We had our high, low. We know we're just looking for a bounce in the morning to keep this uptrend alive, but we double topped and then broke the lower low. That's the setup where we say, okay, top's set after that double top, and now we have to zoom out and look for a daily higher low to form. But of course, algos at the end of the day, led by the financial sector, V-shaped bounce. And we'll look at the financial sector. End of the day move. So here's the dump. The dump for the financial sector says no big deal. We're just looking for a 15-minute higher low and then a new high of the day into the bounce. And again, we didn't see much dump in those major running sectors while the market dumped to a new low of the day. And that's because XLF was not dumping. Look at this correlation on XLF and Jets, the airline sector. Same chart. Look at the daily time frame. So we had the laggard sector on Jets. We had the bull move, 2-day consolidation, higher low, continuation. Look at XLF. Laggard sector, bull move, 2-day consolidation, continuation. There are absolutely algos and bots correlated between all of these laggard sectors. It's like whoever's programming these computers said, hey, let's look at all these algo sectors. And people like myself were saying this market bounce is all tech sector. Everybody was saying that for a couple months. This is all tech sector. It's all Microsoft, Apple, Amazon. They're leading the way. And the shift has certainly gone underway a bit slowly over the past couple of weeks, and today it's just on full display where money is pouring into the laggards. Tech sector names are still just holding on just fine. So the major tech sector names that we are watching, of course, QQQ, and this is what QQQ is doing, holding on just fine. But our major names, the most important stocks in the market due to their weight in SPY, Apple, bulls just fine. Microsoft, nice tightening daily range to be watching into next week. High, low, lower high, higher low, lower high. We're looking for a higher low. Amazon, we know it's been holding up well, just formed a lower high compared to its all-time high. So tightening ranges shaping up on our big tech sector names. And it's going to be very interesting to see how these tightening ranges break into mid and later June. But again, the highlight for the last couple of days, financial sector keeping absolute strength and taking the brunt of the burden of what is needed to keep this market strong. And they certainly did a good job at the end of the day. And as long as the financial sector stays strong, we will likely see gambling, airliners. Let's see what the hotels are doing. They're not as flashy. Haven't checked in on the hotels in a while. They're doing the same thing. Big bull move over the last 4 days. Laggard sectors are correlated together, and they're correlated to XLF, which was the biggest laggard sector in the broader market. So if I'm sitting there and I want to short the airliners, I absolutely need to have XLF up on my screen watching it at the same time. IWM, very similar to XLF. It's definitely correlated to it as well. I'd put all those names in a basket. They're all doing roughly the same thing. So high or low on XL, or I should say IWM. And we did end up, nope, it's an inside bar. So if the inside bar breaks bearish, we look for a daily high or low compared to 136.41. And of course, if it breaks bullish, this move keeps going. Any name that's hitting the high of its COVID bounce has a lack of resistance nearby. Checking in on SPY, we didn't break the high of yesterday on SPY. So what does it mean? Let's see if we're learning here. What does it mean when the futures chart sets a 4-hour lower high and lower low with no bear follow through? And the answer is, it means zoom out and look for a bull flag. Look at the 12-hour time frame. That's a bull flag setup. It's possible that the market is forming a bull flag right now. So QQQ, daily time frame, a little bit toppy. We did break the high of yesterday. All-time high was 237.47. We tagged it and then pulled back. But tons of space where anything above 223.94 is a daily high or low. And again, the daily 12-period exponential support, which has held every single test on the way up, is going to be our visual guide. And we will be approaching that. If we see a red day tomorrow, it will be in play. Healthcare, getting a little bit tight. And if we look at the 4-hour time frame, there's a nice tightening range here where we have our low of 169, high of 103.47, and we held that 169 level after rejecting from resistance. So I'm pretty much watching that range in the short term. Those levels, and if the bulls can hold support, we'll stay in the sideways range. If it breaks, the daily uptrend here is not entirely clear. You could say that a break of 169 is a loss of the daily higher lows. So whenever things aren't clear, I zoom out. And on the weekly chart, I can say that as long as the bulls hold 98.07, the weekly chart certainly remains bullish. Financial sector, very strong. Close at the high of the day, saving the bulls at the end of the day. And again, look at the lack of resistance. This is why these bulls can stay strong easily. 25.03 was a gap that filled. 25.84 is the next level. Every level, there's leaps and bounds in between it. And it's not even a very significant clear level because it was just little levels hit on the all-out dump on the way down. Beautiful perfection rotation to keep the market strong. Got to give it to the bulls or whoever's clicking the buttons and flipping the switches. They know what they're doing to keep the market strong. XBI. So XBI, the most important support for me is $100 and 98.87. Anything above 100 is just a daily high or low. If we start taking out the daily higher lows, we zoom out, and weekly consolidation will continue. It was already underway starting last week. Currently an inside bar. No red flags. At this point, it could be a weekly bull flag. And we'll see if the daily higher lows are able to remain intact. SMH, sideways, bull break, and nothing but follow through since that bull break. And again, lack of resistance after 150.18. We filled some gaps, so we're now looking up at pretty much the all-time high, 152.62. For the bulls to break it. And going to be voting with our members whether we want to be covering SMH or SOXX, because there's a difference. SOXX is only US companies, but it is smaller in terms of the holdings. SOXX has the 3 times leveraged ETFs that trade off of it. They're both looking at the all-time high. They're very, very similar, just some very small differences. And tons of space to establish a daily high or low once this move tops out. And the VIX dropping to lower lows, a little bit of a lower wick with that end of the day sell-off in the S&P 500, but on any bounce, anything under 30.60 is just a daily lower high, and that is the most important factor for us. Daily lower highs every single bounce. So that's where we stand as far as stocks and sectors go. If you're looking for volatility, PENN, Jets, AAL, tons of volatility in both directions, but certainly favoring bulls overall. Gold. So gold is not getting follow through. So a daily downtrend confirmed with no bear follow through means zoom out and look for the potential of a flag. This is an example of where your prerogative, I don't know if that's the right word, where you as a technical analyst can determine. There's opinion involved. So I look at this and by definition, I would say if I'm writing in a textbook that this was a higher low and a higher high. And that would rule out this being a flagpole for a bull flag because our higher low was established right here. But me as an individual, I know the details. I know we never lost the daily uptrend, and the only reason this candle pulled back is just based on when the candle of the week rolled over. And if, the candles rolled over differently, if the action happened earlier in the week or later in the week, that lower wick wouldn't have dipped below, and we would have kept the pattern of a higher low every single candle. So again, just zooming in here, end of April, mid-April, we look at the daily time frame. Did we lose the uptrend at that point in time? No. It was a pullback, higher low was set, tightening range, and then a bull break. So because of that, because we never lost the daily uptrend on this entire move, I am viewing this all as one move and the flagpole, and this as the flag. We lost the daily uptrend now, so now we're forming that flag and consolidating. The weekly exponential moving average is our visual guide. If this level holds, again, blanket statement, if then very clear. If weekly 12-period exponential moving average is support, then it is a possible weekly bull flag. If we lose that level, weekly bull flag will go out the window. But as of right now, we have a little bit choppy action today. We topped out, pulled back, big bull move. We can be watching the 12-hour for a little bit more clarity. We're looking for anything under the top of 1745 here to just be a 12-hour lower high. But the bottom line is the fact that it was a green day tells me bulls are still hanging around, possible weekly bull flag, and bears are not proving anything to us. And of course, we look at silver, and that adds a point in favor of the bulls. The fact that we're still in a very strong daily uptrend, we're holding daily exponential support, and there's no red flags here. Silver bulls would love for XAU, XAG to be a daily bear flag. Look at the daily RSI. We were down in the teens, and we're cooling it off back to 30. If we set a lower high and don't get much more bounce here, it absolutely could be a bear flag and see another leg down, which would keep silver much stronger than gold. That's entirely possible. Look at the last bounce. That was absolutely a perfect daily bear flag, and another one is potentially possible. Miners did not have as well of a recovery day. We did see a higher close, certainly, but a little bit of market weakness playing a factor into that. So I need more proof from the bull miners. We didn't break that high of yesterday. I need that double top of 33.59 to break for us to zoom out and say, okay, that's a potential weekly bull flag. And look at these miners. That's another reason I'm considering gold all just one move on the weekly time frame. And that's because that's exactly what the miners did. And they are in a potential weekly bull flag pattern. And of course, GDXJ is stronger. And it's in a potential daily equilibrium. High, low, lower high, higher low. Anything under 48.31 is a lower high. So if I haven't been trading miners actively anytime recently, but if I were, I would know to be sitting on my hands right now and saying, okay, we have a tightening range. We know there's going to be a spike in volatility and volume, which means a spike in opportunity sometime next week, most likely. I guess we only got one more day. So very likely next week, we are going to look for a break. And we know that when ranges break, again, look back here, tight range, pay attention, spike in volume and volatility is coming. There it is. Not going to predict which direction. The bulls certainly have favor due to the prevailing trend and due to weekly bull flags, but we know a break is going to be imminent, likely next week. Oil staying strong as well. Daily inside bar, higher low every day the last 5 days. The 4-hour time frame just traded sideways and saw a little short-term bull break. And again, we're just not seeing any bear follow through. It's a 12-hour possible bull flag as well. And the fact that oil just keeps its slow and steady recovery up is, again, just a point in favor of market bulls. And we got natural gas. Double top with the high of yesterday. Not much going on with natural gas. Again, it's just battling weekly exponential resistance. 2 days in a row, butting against that level. And one more trading day to go. Looks like we're going to be trading probably right under it. It's going to get real tight next week as to whether or not the bulls can break that level or not. Still definitely worth watching natural gas. And I've been dogging natural gas as a bull for a long time, rightfully so, but we know the momentum will shift eventually, and we're just starting to see some signs of that. And just as an example, We look at BA. BA was a dog. Bears had absolute complete control, but we just saw bear breaks, not getting much follow through, and then the bulls took over, and I absolutely would not be surprised in the slightest to see this weekly time frame for natural gas see a big bull move happen sometime in June or July. I probably won't play it, as my New Year's resolution for 2020 was don't trade natural gas, because it was one of my bigger losers for 2019. So going back and reviewing my progress, said, all right, I'm going to trade my winners more, the things that went well, and the things that did not go well, ditch them. If I were going to be trading natural gas, I would do it through futures, so I had more control and was able to utilize stop losses overnight. So that is where we stand. Again, it's just constant frustration for bears. At this point, we have exponential moving averages for visual guides all over the place. The S&P 500 12-hour time frame. The 4-hour time frame. Have to lose it on the 4-hour time frame for the 12-hour to then be in play. It is a 12-hour bull flag. Are we going to see the next thing that I care most about? Next time we see consolidation on XLF to find a daily high or low, we're certainly going to anticipate a daily high or low because of how much space the bulls have to work with, 8% since our last level. But are we going to see either XLV or QQQ take over? Are we going to see money leave XLF and go into one of those sectors is essentially what we're going to be watching for. It is certainly fascinating. And this is definitely a market environment where we can learn a lot. I was not trading during 2008. And you better believe that the last 2 months, 3 months are going locked away in my mental library. And sometime down the line, 5 years, 10 years, who knows? There's going to be a lot of opportunity to utilize these lessons that we are learning in this current market. SPY's up pretty well after hours. Certainly not dull. Have a good rest of your day. We'll continue to check in. I guess I'll see you all next week. Do good things.